Hi everybody, Howard Friend, HF Systems here. Just wanted to draw your attention to my outlook, my bearish outlook on euro dollar. Now, I've got a number of reasons why I'm bearish, some of which are technical, some of which are fundamental. But what I want to focus on right now is the technical picture of the market. And when you do technical analysis, what you're doing really is looking at repeating patterns. You're looking at patterns which give you some idea of predictability going forward. Now, the current pattern on the euro dollar on the right-hand chart is a kind of symmetrical triangle, although maybe slightly with a bearish skew to it. Now, that pattern basically, for me, is a mirror image almost of something that we saw on dollar index way back in the early 90s on the left-hand chart. Now, what happened back then was we saw a big swing to an all-time low on the dollar index. The swing was 22.3% over several months and maybe a couple of years. And then that took the RSI, the 14-period RSI, to a level below the oversold level of 30, 26.32. Now, from that point, we saw quite a big rebound over a number of months, which which saw the index add on 18.3% in value. Now, from that point onwards, then we settled into a trading range, and we had lower highs and higher lows, the typical symmetrical triangle configuration. Now, the symmetrical triangle really lasted well into the last kind of lower peak, 11 weeks before it started to break down, and then we saw the breakdown of the whole pattern, and that really signaled a resumption of the major downtrend. Now, what happened with the RSI? Obviously, at the low, it was oversold, 26.32. And then the bounce saw the RSI really make not much headway above the 50 level. So a couple of pushes, 3 pushes, slightly above the 50 level. And that was the end of the bear market rally. Okay, so RSI giving you a bit of a clue as to the long-term trend. At the swing low, it's below oversold, and at the corrective highs, it's around the midpoint. Okay, around the 50 level. So eventually, it broke down and obviously made its way down to its all-time low for dollar index. That was a nearly 21% decline from the recovery high. Okay, so I think we're at a very similar point now with euro dollar, just moving across to euro dollar. So euro dollar, similarly, the decline, the last big decline saw euro dollar decline by the same 22 odd percent before it got oversold, and the RSI went down to 24.22, just a little bit lower than it was on dollar index, 26.32, but you get the point. So it was oversold, and then we saw the recovery, which was almost identical in terms of percentage advance, 18.2% at the high, which came in at 112.76 or so. So a very, very similar, almost identical advance in terms of percent compared to the dollar index example. And then obviously we settled into the trading range on euro dollar. Now, again, we are making lower highs and we're making slightly higher lows. We've made one higher low already. Okay. Now, I mentioned here on the dollar index that week 11, that was really the extent of the bullish energy, I would say. That's really when the bullish energy really ran out, and then the bears came back in, and that was really the start of the resumption of the major downtrend for the dollar index. And here we are on week 11 on euro dollar, or not week 11, I'm sorry, month 11. These are monthly charts. Sorry about that. And we are we're pressing up against the rising trend line within the triangle. And again, notice how the RSI, having bounced from 24.22 below the 30 level, is struggling around that 50 level. So a very, very similar configuration in terms of momentum. So in a similar kind of way that we were oversold at the bottom, as we were here for dollar index, once we get into this trading range here and the RSI is trying to push above 50 and struggling, then we get to the point where we become undersold. If the downtrend is still in effect, which I believe it is, then surely an RSI which was down at 24 comes back to 50 and struggles, goes from oversold to undersold. So now there's plenty of energy for the bears to step in and resume this major downtrend, pretty much as they did on dollar index back in 94, 95. So a similar kind of decline, I'd be looking really for obviously a 20%, 21% decline from your 112.75 level, and that really should be taking you to new lows for the downtrend for euro dollar. Now that will probably be it, I think, because on a bigger picture, I believe that we are tracing out a corrective pattern. Let me just get the scale right here. I believe that we are tracing out a corrective pattern from the 2008 high. So once we make that push to the new low, I think that will be the time when we can start to think about putting on some good long-term longs, dollar shorts, euro longs. And as we get down below that 90 level, then we're entering a big area of support on euro dollar. Just throwing some politics into the mix. One thing that I've noticed since the days of Richard Nixon is that Republican administrations in the US tend to oversee dollar declines, US dollar declines of over double digits, so over 10%. And the same thing happened really. Trump saw a decline. Biden has seen a rise in the value of the dollar, etc. Obama was massively up. Bush was quite sharply down, etc., etc. So that gives us a bit of a window of opportunity into the election and certainly into the start of the new year for some dollar strength, whether we change administration or we don't. So I think there's a political window of opportunity for some dollar strength going forward, which ties in with the technical outlook for the dollar and for a bearish outlook for euro dollar. So let's see how we unfold. If you've got any questions, please feel free to send me a direct message here on LinkedIn or send me an email, hmfsystems@gmail.com. Thanks very much and good luck.